Good afternoon, everyone, and welcome to the e-invoicing in the UAE webinar hosted by SAI Management Consultancies. Thank you for all the time to join us this Friday. We truly appreciate your presence and interest in this important and evolving topic. To begin today's session, I would like to introduce our Operating Officer, Mr. Sai Krishna, who will be the main speaker and presenter for this webinar. He will be guiding us through the key aspects of e-invoicing, including importance, implementations, and regulatory perspective. Please note that the Q&A session will be conducted at the end of our presentation, where all your questions will be addressed. Without further delay, I would like to hand over the session to Mr. Sai Krishna.
Thank you so much, Sushma, for the warm introduction. So, hello everyone, a very good afternoon. And as Sushma rightly mentioned, really appreciate taking your time on a Friday to join our session of e-invoicing in UAE. So, before we actually begin the session, I'm pretty sure that most of you attending the webinar don't know me in person. So, before we actually begin with the main session, let me quickly introduce myself. So, myself, Sai Krishna, I've joined Sai Management Consultants in the position of a Chief Operating Officer. So, I actually began my consulting journey 9 years back. And quickly after moving into consultancy, so I actually moved to industry. And over the last 7 years, I actually had this privilege of working with the diverse and reputed MNCs across UAE. In my previous stint, I was actually working with Unilever for almost 4 years. And now, in my recent stint as CEO in Sai Management Consultancies, I would mainly be driving the e-invoicing and also the digital transformation vertical. So that's the brief about myself. So quickly moving into today's agenda. So we know that it's all invoicing that we're going to cover. So, but what exactly are we going to see in invoicing? So looking at the audience, I'm pretty much sure that we have like different set of audience. Some of you have absolutely no knowledge what invoicing is, and some of you have basic knowledge. And there are also people who actually gain an advanced level of knowledge in terms of how invoicing works, what are the various intricacies, etc. So in the interest of all the audience, what I would do is that we will start with the basics, the overview, the framework, the benefits, scope, etc. And slowly, as we move through slide to slide, we actually move towards more complex and more relevant aspects of the e-invoicing. So yeah, starting with the overview. So e-invoicing, I would actually put it in this way. So it's one of the main pillars of UAE Vision 2031. I'm not sure how many of you have actually heard, but UAE government has this mega Vision 2031, where they're actually planning to achieve a lot of things for the growth and development of the company. And this e-invoicing as such will actually reshape how the enterprise will actually operate, transact, and also ground the data. The goal actually is to move the economy towards a more transparent and an accurate way of conducting business, and at the same time have real-time reporting to the tax authorities. So as we all know how technologically advanced or captivated UAE is, so lately they have been investing a lot of investment in building their technological infrastructure to ensure that, they stay on par with the rest of the world. And e-invoicing, I would say, is one of their objectives, which actually moving in this direction. So, as by the basics, you all know invoicing is nothing but electronic invoicing framework where the creation, exchange, and the reporting of the data all happens in an electronic format. So, what is it that distinguishes e-invoicing compared to the e-invoicing process that we are all following right now? So that will actually be covered in the key requirements. So as I would say, there are like four pillars for e-invoicing, how this will redefine how the invoicing is going to work in the future. So first and foremost, structured format. So what do you mean by structured format? So we all know that the businesses operating in UAE, we have lakhs of companies, and these lakhs of companies have like thousands of different types of invoice formats. Some are in Excel, some are in PDF, and people are still using paper invoices. So this is going to stop now. So once e-invoicing is going to come in place, to whosoever it's applicable, they would actually be implementing a structured XML-based machine-readable format. So we heard of different format, Excel format, JSON, etc. Now, this is a standard, I would say within UAE, it's going to be a universal standard, whereby all the invoices will be on a single structured XML-based format. and standardized data fields. So again, coming to the data fields, like, all the invoices that get circulated right now between the companies, between the stakeholders, they don't have the same set of data. Like, so we are all complying with that, but over and above that, there are like some extra fields that some companies put, and some companies might even like, miss out the mandated VAT details. So now we have a defined UAE print data directory, which mandates close to 50 mandatory fields. So every single invoice, firstly, XML, secondly, every single invoice needs to have the standardized mandatory fields as implied by UAE print data directory. The third component, mandatory transmission. So for those of you who are not aware, once the invoicing goes live, there won't be a direct transmission between the supplier and the ultimate customer. So there'll be someone called as an ASP or an accredited service provider. It's a technology company. So he acts as a middleman. And what role that ASP plays, we'll be discussing. So all the invoices has to be transmitted through the ASP. And obviously, real-time reporting, which is very evident, considering the fact that the invoices, the very meaning is an electronic transmission of invoices. So the reporting also happens in an electronic way and real-time basis. So within like we say a few seconds, like FTA will have a clear visibility of what are the invoices that you actually exchanged with your customers. So now again, at a broad level, how this invoicing framework works. So first and foremost, the framework that we, the UE has actually decided to implement is a decentralized framework. So for those of you who know how e-invoice that got implemented in other countries, etc. So there are like different types of frameworks. For example, Saudi Arabia has actually implemented e-invoicing way back 4 years back. And that was actually a centralized framework. And that's still in existence. That's more of a centralized framework. And what happens over there is that there's a single authority, ZATCA, who actually controls and monitors the entire framework, the transaction framework. And every inflow or flow of invoices is actually monitored by them. Compared to that, what UAE has done is that we have actually opted for a PayPal-based decentralized network. So what is PayPal? PayPal is nothing but it's a technology framework. And this is actually handled by this company called as Open PayPal based out of Belgium. So they actually provide the solutions whereby the documents and data flow can actually be transmitted, managed electronically. So they have actually provided this technology framework. So this decentralized technology framework, which we're going to use, is a PayPal based. And considering that it is PayPal based, so PayPal is again, it's existing in multiple countries. So which means to say that there are several countries who actually implemented invoicing. They went live in invoicing using PayPal technology. Like we have Malaysia, we have Singapore, we have Belgium, and there are several other European countries. So each of these countries, we can actually communicate with each other using a PayPal-based ID. Okay, so this PayPal pint AE or pint UE data directory is what we actually need to follow in terms of our invoicing. And then, as many of you must be aware, as this is the first phase of invoicing that's being implemented in UE, we only cover B2B and B2G transactions as such. So B2C is excluded from the scope as of now. Now, coming to the strategic benefits. So obviously, before understanding what e-invoicing is, we also need to understand what are the various benefits that we as businesses as well as the government is going to derive, in terms of implementing the invoices. So for businesses, as such, the issue and exchange of invoices will happen electronically now. Real-time click of a button, exchange of data can happen. And there's increasing transparency and also tax compliances and greater efficiency and also removal of human errors. With things going electronic, once the technological parameters are set, the scope for human error is completely removed. And also we are simplifying the tax procedures for taxpayers to comply in the future. For government, obviously, it's achieving its dream of digitization. So it will be reducing its costs of minimizing the paper. So maybe down the line in 5-7 years, there'll be like zero paper usage across the country. Minimize VAT leakage. So this transmission of data that's happening one-to-one between us and the government. So there is no scope for others actually having any sort of visibility of our VAT data or a transaction, etc. and definitely more accurate and faster invoice processing. And this overall will also, strengthen the trust between the businesses, the customers, as well as the government. So before we actually discuss about e-invoicing in UAE, I just wanted to give you a picture of like, what's actually happening in our immediate neighborhood. So as you can actually see by this, there are many other countries in the Arabia and the Middle East region who are in different phases of implementing this e-invoicing. So as you can see, Egypt, one of the first players, actually they have gone into e-invoicing way back in 2020. And even now they are like doing their rollouts in multiple phases. And Saudi within Gulf, the first country which has actually implemented e-invoicing. So way back in 2021, they actually started with the e-invoicing. And now in the immediate pipeline, we have Oman and UAE. So both of us, like more or less, we are in the same timeline or stage, I would say, in terms of like, rolling out our e-invoices. However, we do have Qatar, Kuwait, Bahrain. As such, we don't have any sort of an official news or announcements yet. But however, there's a lot of talk surrounding that, they might also get into invoicing very soon. So now that we understand the background, let's get into some real business by actually diving into more technical aspects. So what does e-invoice actually cover? So I would say that there's still a lot of misconception that is happening across the ecosystem that e-invoicing is something that is applicable only for those businesses which are registered for VAT. So for the first misconception that I want to break is this, that e-invoicing has nothing to do with your VAT registration. So as I actually circled out over here, so it covers all the B2B and B2G transactions as of now in the first phase. And be it standard rated of 5%, 0%, exempt, auto scope supply, all fall under invoicing. All the businesses operating in the UAE, regardless of your VAT registration, you have to get yourself enrolled for invoicing. Even the foreign businesses which are actually registered in UAE, they also need to actually implement invoicing. There has been some sort of a kind of like confusion with regards to the data hosting and the server rights, etc., which lately the government has actually clarified that irrespective of like where you actually stay your the database, the cloud storage, etc., that's not much of a concern as long as we can actually access it within UAE. Okay, so that's the thing. And obviously, the broader objective is that every single company doing business in UAE has to come under the umbrella of invoicing. So the objective of the government being is that, at a long term, the government wants to encompass every single business, whether it has VAT taxation applicability, corporate tax applicability, transfer pricing. And what happens is that the taxation authority over a long term through a single lens will be able to monitor all the license, I mean, all the compliances, be it your VAT compliances, be it your corporate tax compliances, be it your transfer pricing compliances, So that is the much broader objective as to why this e-invoicing is actually falling in place. And we also have some inclusions and exclusions because there is still some sort of an anomaly concerning their inclusivity and exclusivity. So as you can see on the top, the drop shipments are very much in the scope of e-invoicing, call it drop shipments, and even how there's high sea sales. So they're all coming under e-invoicing. Foreign transactions. When I say foreign transactions, the exports, the exports that you do, you sell something from here to your customer who's based out of UAE. So they'll be falling under the scope of e-invoicing. Even the sole establishments, even they have no escape from establishment. Forget sole establishment, even the individual natural persons who are actually conducting business. Say, for example, I myself, I own a building. I'm actually leasing out the building to several tenants. And, even I'm mandated to actually apply invoicing and actually start transmitting the invoices through electronically to all my tenants or the customers. And thankfully, we also have some exclusions as of now. And these exclusions are very much defined in the recent guidelines that the FDA has actually issued. So the first and foremost exclusion is obviously the import and, the import of goods and services. So import of goods and services, again, it is something which is coming from out of the country. You are actually at the receiving end. So there's no mandate, obviously, for the person who is actually sending the goods from out of the country into UAE to actually get himself registered for e-invoicing. So this is out of scope. Exempt and zero rated financial services transactions. So there are some financial services transactions which as of now are actually exempt. These are typically those transactions which even historically there was no requirement for raising any sort of an invoice. Say for example, vehicle loan interest or a commercial loan interest. So whenever you used to actually incur these interest expenses, the financial institutions they never actually used to raise any invoice sort of a thing. So no, so these kind of interest transactions and also the spreads that the banks and the financial institutions they earn through various financial transactions. So those are also excluded. So that's in the domain of the exempt zero rate financial services. I'm just giving you illustrative examples. The actual list is pretty long. And then certain international transportation services. So international transportation services, to make it very simple, I'm actually referring to the airline services. So what typically happens now is that whenever you actually buy a flight ticket, so the airline actually issues a e-ticket, and this e-ticket is actually being issued in line with global IATA electronic standard systems. So this data is already being captured by the government in an electronic way. So when e-invoice gets mandated for even these kind of transactions, there'll be duplication, and hence that is the reason the government has actually taken the stance of actually exploring this government entities for performing any transactions in their sovereign capacity. So we can pretty much guess what kind of transactions we're actually referring to over here, like the various businesses that the government is in terms of a sovereign capacity, where they don't have any competition whatsoever from the private players, be it the oil and gas sector, etc. So these kind of cases, these particular government companies, they don't have to actually mandatorily, comply to the invoicing guidelines. And then we have some sort of a uh, what do you say, like a waiver for two classes of transactions. That is for VAT intragroup transactions, and we also have this air cargo services. So for these two group of transactions, the FTA has actually given a waiver of 24 months. So starting from 1st Jan 2027 till 31st December 2028, any transactions that you actually, if it's a VAT group, you have like 5, 6 entities within your VAT group. So any transactions that happen within these 5, 6 entities, you don't have to raise any invoice. And this timeline you have until 31st December 2028. So, but starting from 1st Jan 2029, it becomes mandatory even for the group companies within the VAT group to actually raise invoicing. And lastly, we have this investment holding companies. So what exactly is this investment holding company? Say, for example, there's this holding company and it has investments in multiple subsidiaries. It doesn't do business, it doesn't do any business or operations of any sort. So the only source of income that it actually gets is the dividend income that the subsidiaries actually pass on. So for these kind of companies also, there is some sort of a waiver where they don't come under the inclusion of e-invoicing. So that's briefly about the scope. Okay, so now comes the implementation roadmap, a very important slide. So which actually gives a very uh, lengthy calendar view of what e-invoicing timeline is, be it appointment of your ASP or when do you go live. And just to keep it simple, so e-invoice implementation based on this timeline, I can actually divide it into 4 phases. So phase one is mainly applicable to pilot entities. That's also called as pilot mode activation. So what exactly is this pilot mode activation? So the taxation authority has actually handpicked specific entities, maybe based on their size, based on the volume, their contribution to the economy. So the list is very confidential, and these set of companies they were actually asked to go into pilot mode in terms of implementing and doing live in terms of their electronic invoicing. So these companies, starting from 1st July 2026, they need to be live. Okay, so that's the phase one. And then we have the second category of companies, which is basically those large entities whose turnover actually is more than 50 million. And this is a very, very common question that we keep hearing out day in and day out. So what do you mean by 50 million? So how do I assess my revenue as 50 million? Does it include only standard rated? Does it include excluding the intercompany transactions and what financial period, etc.? I know it's a very sort out of the question. So let me clarify that. So when the authorities say above 50 million, so you actually are supposed to see the immediately closed financial period. So your financial period can be Jan to December, it can be April to March, depending upon whichever period. And the first base for you to actually assess this revenue is your audited financial statement. So the recently closed audited financial statement, if it's above 50 million, then that'll be your criteria. However, if you say that your books are not audited yet and still in the review stage, then you can as well consider the management reporting numbers. So that actually sums up how you actually need to compute this 15 million. And obviously, this 15 million, there's no exclusion to whatsoever transaction it is. It's basically your pure revenue irrespective of where you're earning it from. Okay. So that simplifies this thing whereby any entity earning revenue above 15 million has to appoint an ASP by 31st of July 2026. So again, it's not about going live, it's just about appointing an ASP by 31st of July 2026. So by July, you still have time whereby you can choose which ASP to tie up. And accordingly, we need to go to MRI tax portal and then update FTA saying that we have actually appointed ASP. And for these set of entities, again, they need to go live from 1st Jan 2027. So starting from 1st Jan 2027, all your transactions will actually go live in terms of e-invoicing. So from the very first day, you have to actually start shooting out your invoices or start receiving your invoices through electronic format. And then we have the next phase whereby wherever the turnover is less than 50 million, so you still have some sort of a time in terms of appointing both your ASP as well as going live. So there are actually like two category of companies that are actually coming under this phase, and only in terms of ASP appointment. So in terms of ASP appointment, both the companies whose revenue is less than 50 million as well as the government entities, they are supposed to appoint their ASP by 31st of March 2027. But however, in terms of going live, the government entities do have some sort of a extra bandwidth, I would say, whereby they are actually given time till October 2027 in order to go live. Whereas these entities are less than 50 million, by 1st of July 2027, they actually has to go live. So this is a brief about how the timeline actually works. Okay, so now comes one of the most interesting slides of the presentation. So, which is also called as the five-corner model. Okay, so what exactly is this five-corner model? And I'm pretty much sure the moment you actually look at the slide, you can actually connect it to some sort of a telephone or an electric network sort of a thing, you know. So to keep it simple, this model actually shows how the inflow and the outflow of data and what are the various corners through which the data actually passes until it reaches your ultimate customer. So say, for example, we have for a supplier in the corner one, and then at corner two, we have accredited service provider of the supplier. And corner three, we have accredited service provider or ASP in short form of the buyer. And then at corner four, we have receiver or the ultimate customer. So what typically happens out here is that, so supplier will be submitting an e-invoice pinned UAE data in an agreed XML format. So as I said, with this invoicing coming into implementation, the data transmission has to happen in XML format. So this can either be a direct transmission that happens from your ERP or accounting software to the ASP, but in most of the cases, the ASP are also providing this extra infrastructure. They irrespective of which format you're sending the data in, they'll be converting into the XML. And after they convert it to XML, they're gonna validate or assess the data. Because what are they going to validate? They need to ensure that your data actually meets the standard guidelines, which I explained in the second slide, whereby you need to have those defined mandatory fields or any extra fields, which the law would actually mandate. We'll be covering them as well in the additional moving ahead. So they will actually validate whether your invoice actually meets all the criteria, whether it's an Excel format, whether it meets all the standard information requirements. And once it validates, the validation is approved, then it actually transmits it to the FTA. And FTA sits here in corner 5. And here, obviously, the ASP would not be sending the XML as it is, they receive it from the supplier. So what they will be sending to the FTA is TDD. TDD is nothing but tax data document. So tax data document is nothing but it is a summary of everything that is there in your XML invoice. So whatever is there in your XML invoice, it will convert into the TDD, and that is what it actually sends it to the corner 5. What happens when it goes to the corner 5? So once it goes to the corner 5, which is Federal Tax Authority, there will be a second level of validation that happens at FTA. So One level of validation happens at corner 2, where after the validation test is approved, it goes to corner 5, and FTA again revalidates it. And if it's completing the validation test, then what FTA does is it sends something called as MLS. MLS is also called as message level status. So this message level status is actually sent by corner 5, which is FTA, to corner 1, which is a supplier, which is a confirmation from FTA saying that we have received your invoice, we have validated it. Hence, this is the confirmation message. So MLS, I would like to highlight that it's one of the most critical document in terms of your archival in the future, because anytime in the future when FTA does an audit for whatsoever reasons, one of the key things that they would actually look for is the MLS, because this is a confirmation directly which has come from FTA to you as a supplier. So once FTA validates it, so FTA obviously it does two levels of validation. So as I said, first the invoice goes from corner 1 to corner 2. Corner 2 sends simultaneously to both corner 3, which is the buyer SP, and also to corner 5, which is FTA. And again, what FTA gets from corner 3 is again validated. And again, corner 3 will be sending this document TDD, which is tax data document. And again, FTA would actually be giving an MLS to corner 3. So this MLS, just to correct, it will be sent from FTA to corner 2 and corner 3. And however, corner 2 and corner 3 have their responsibility to share this with the ultimate supplier and the receiver. So this is exactly how the 5 corner model would actually be working. So coming to the next slide, this is a very important slide. So this is something which I actually had to cover in the previous slide. So we have something called as a PEPAL ID. So what happens is that every entity which actually gets onboarded into e-invoicing will be given a PEPAL ID, which is also called as a participation ID. What exactly is this participation ID? This participation ID basically acts like your address or your telephone number, whichever way you want to call it. Say, for example, as we discussed in the previous slide of the corner where the data get exchanged from one corner to the other, how do you think supplier will be ultimately routing this invoice to the customer? So the basis for him to route is based on the PayPal ID. So PayPal ID, as we can see, it's a 14 digits code. So first 4 digits, 0235. That's like a schema ID, which the PayPal has actually given for UAE based entities. So as I said earlier, there are several countries who actually gone through PayPal ID. Actually implemented the PayPal framework. So each of these countries, in Malaysia, Singapore, they have their own unique PayPal ID. So for UAE, it is 0235. So if you have to correlate, it's more similar to the telephone identification code that we have for UAE or India, where UAE is +971, India +91, USA is +1. So PayPal ID actually works in the same way. So the first 4 digits, 0235, is very similar to 0971, +971 what we have. After 0235, we have 10 digits, and these 10 digits is nothing but the tax registration number. And when I say tax registration number, I'm not talking about tax registration number for a tax group, whereby in the cases where we have tax group and there are like 4, 5 entities and all that. No, that's not the case. Every single entity within the tax group will have its own individual tax registration certificate, and it will have its own TRN number. So this PayPal ID is nothing but 0235 followed by their 10 digits in their individual tax registration number. So this PayPal ID acts as an address for both the supplier as well as the buyer in terms of transmitting the data. So me as a supplier, if I were to send the invoice to the customer, I'll have to mention the PayPal ID of my customer. That will actually define the routing, how the invoice gets actually received by the customer. So that's very much about the PayPal ID or the participation ID. Next, again, another very important slide. So this is nothing but the data standards or the data which is actually mandated to be highlighted or inputted in your electronic tax invoices. So as you can all see, there are 51 mandatory fields in an electronic tax invoice. In the second slide, when I actually say that one of the pillars of electronic invoice being standardization, so this is the standardization that I'm actually talking about. So there are 51 mandatory fields, which irrespective of which entity, which type of transaction you're doing, these fields are mandatory. Okay. And these fields have been grouped, as you see again, under 6 different groups based like your invoice or seller, buyer, document totals, tax breakdown, and the invoice line items. So these are the different groups, and under each of the groups, I've actually mentioned what are the mandatory fields that needs to be covered in your e-invoicing. Out of these fields, if you can see, there are around 15 fields that are actually highlighted in the gray font. And there is a specific reason why these have been highlighted, because I wanted to distinguish this data from the rest of the data. Why? Because these are some of the additional fields which are mandatory as per UAE PINT directory. They're not covered or they're not mandated by the VAT law, but as per the UAE PINT directory, these fields are actually mandatory. Say, for example, you see the seller's electronic address or the buyer's electronic address, and various other fields like this, So these fields actually are add-ons in terms of your compliance, I would say, compared to what it was in terms of VAT. And over and above this 51 mandatory fields that we're talking about, there are also 250 optional fields, depending upon the type of transactions, your registration, and so on and so forth. These are some extra fields that need to be added. So case to case basis, instead of 51, it can become 52, 53, 54, or sometimes some cases can also go up to 60. So it's all about pick and choose based upon the business requirements, how many extra optional fields that you are likely to add into your invoicing. Okay, so that's a brief about what are the various fields that needs to be captured. And I don't have to insist, but you can very much guess the kind of extra work that many of the businesses will actually have to undergo in terms of restructuring their entire database, the invoice build setup, etc. So next, I'm actually now that we have discussed what are the data fields that are required. So let me also give you a glimpse of how an invoice would look like. Again, don't be mistaken. This is not an XML invoice. So this is just an XML invoice if it was converted into a normal PDF invoice, how it would actually look like with all the mandatory data fields. So this is actually published by FTA itself in its guidelines to give an illustrative example as to how the new invoice would actually look like once e-invoicing will actually go live. So you can actually spot many new fields over here. Like you see, again, going back to the electronic addresses of the buyers and the suppliers, you have something called as UUID. So UUID is nothing but it's like a second level of confirmation once the electronic invoice is generated. So this is not something that you will have to generate in your accounting software. Once it gets converted by your ASP, then this UUID also will can generate it. Yeah. And so now that I've shown you the PDF, so this is the XML format of an invoice, which will look like. So it might look very complicated just at the face of it, because it looks like some sort of a programming language which is just running through. But you'll be very amused to note that every single field that I had just shown you in the above illustration of an invoice, everything is actually captured in this XML format. So as we can see, this is an XML invoice. It's fully structured, it's standardized, and the way it's set up, it's machine readable, etc. And it doesn't look like any PDF document sort of a thing. So this is how you will actually be transmitting the invoice to your ASP. Or as again said, people where you don't have that capability, ASP can actually assist. We'll go back to that later. Okay, so this again is a very complex slide where I would actually require your attention. So with this e-invoicing coming into place, so we might actually see 14 different scenarios. What do you mean by 14 different scenarios? These are the different invoice tabs which will get circulated across UAE. So we have it classified based on the document category tab, and then we also have it classified as by the transaction code type. Okay. And these documents or these transaction type, depending upon whichever class these fall under, there are extra guidelines in terms of what extra information you need or some information which is missing, how it needs to be replaced. I'll just give you a glimpse of all of this as we go through one by one. So first and foremost, electronic tax invoice, very simple to guess. So whatever tax invoices for standard rated, zero rated that you're actually passing on, that will be replaced by electronic tax invoice. Similar is the case for electronic tax credit note. So the tax credit note which was existing earlier, so that will be replaced by electronic tax credit note once you're into e-invoicing. So there's one thing that I actually want to highlight. I'm not sure how many of you are aware, but within invoicing system, you as a customer don't have an option to reject any invoice. Okay, so whenever your supplier is actually sending you an invoice, the only way, if there's any dispute or if there's any discontention, whatever it is, the only way of reversing it is through request of an electronic tax credit note. So you can actually just imagine the kind of complications or the volume of transactions that's going to increase, because the very first year, uh, I mean, like almost all of the people in the industry who actually are aware or understand what how invoicing would work, they're very much prepared that there's going to be like as many tax credit note, or almost like the number of tax credit notes that will be issued will actually increase manifold. So that's with electronic tax credit note. And you have electronic commercial invoice and electronic credit note. So obviously, as per the VAT law, if you don't have any standard or zero rated transactions where yours is either exempt or out of scope, you only raise a commercial invoice or a commercial credit. Yeah. So as even those kind of transactions will come under the purview of e-invoicing. So you'll have to raise an electronic commercial invoice or you'll have to raise an electronic credit note. So that's how it works. And then you have come something called as a self-billed electronic tax invoice. I'm not sure how many of you are there, but this is something which was even there as per the VAT regulation, whereby every registered supplier, VAT registered supplier, this can only be, for example, it's not an option which anyone can choose unless until you're registered for VAT. You cannot opt for a self-billed electronic invoice. So what happens in self-billed electronic invoice is that instead of supplier raising an invoice, the ultimate consumer or the receiver of the service of the goods can himself raise an invoice. That is the reason it is called as self-billed. So if you're wondering as to what kind of transactions are actually covered in this, say for example, I'm a business and I have a lot of commission agents, and those commission agents are actually providing some service to me on which they actually get some sort of fixed or variable commission. So me, just to remove the hassle of getting hundreds and thousands of invoices from all my commission agents, I can actually work on this particular structure where I tell my agents that you don't have to send anything. Me myself, based on my calculations, I'll actually issue a self-billed electronic tax invoice, and this is very much in existence in the market. And self-billed electronic credit note, again, the reversal of that. Now another important, the transaction type code. So what distinguishes this transaction type code, and why is it that I've actually listed this on separately? Because depending upon each of this transaction type code, the law as per invoicing actually specifies some extra fields of data that needs to be inputted in your invoice, or it will also give you some guidelines in terms of like how to cover up some missing fields, etc. So coming to free trade zone. So what's going to change in terms of the free trade zone is like any free zone company which actually is going to like shoot out any particular invoice. There's one optional field which actually becomes mandatory in case of free zone companies, where they have to mention the details of the ultimate buyer. So not ultimate buyer, ultimate beneficiary. So the ultimate beneficiary, as you know, it need not be the same as the buyer. In some cases, the beneficiary and the buyer will be separate. So in that case, it becomes mandate for them to actually mention separate optional fields where the details of the beneficiary will be mentioned. Then you have something called as a deemed supplier. So deemed supplier, those of you who are already aware of VAT regulations, the various deemed transactions that actually, we come across in the market. Like if I just had to quote few illustrations. So say, for example, you're giving gifts beyond a particular threshold limit, or you're actually closing down your business, you're canceling your VAT registration. So whatever stock, you're going to convert it from business stock to personal stock. So these are the cases where uh, the concerned person, is actually supposed to raise a deemed supply invoice. So in the case of deemed supply invoices also, there are like some specific fields as mandated by e-invoice guidelines, which you actually need to mention. Third thing is the margin scheme. So margin scheme, again, those of you who are not aware, so there are some transactions. Say, for example, you're a second-hand car seller. So you buy it from someone at a price, say 40,000, and then you're selling it to someone, adding a markup of 10,000, and you're raising an invoice on that. As you know, in these kind of margin-based schemes, there is no question of VAT. The person who's actually making up the markup, he himself does a reverse calculation. Like say if 10,000 is my markup, 10,000 divided by 1.05, then whatever is the tax, I actually take it upon myself, pay to FTA, but I won't be charging anything to my ultimate customer. So deemed supply, again, the specification is that you don't have to mention any VAT, etc. I mean, sorry, margin scheme. You don't have to mention any VAT or something like that. Then we have something called as summary invoices. So summary invoices, it's say like you get these invoices from banks for various bank charges, etc. Instead of raising an invoice for every single transaction at the month end for the entire summary, they just give you one invoice and they actually send it to you. And some of the exclusions that e-invoicing guidelines are actually giving for these kind of transactions is that, say, for example, in this, there are some discounts or there are some specific fields where you don't have any data to enter. So there you can just put zero. And at the same time, if you have to put any discount, there is no option because in e-invoicing, the earlier the option that you had of providing deductions or discounts, etc., is eliminated. So as and when you want to give any deductions or discounts, etc., you have to raise a credit note. So that's how summary invoice also is a bit unique. And then you have something called as a continuous supply. So for continuous supply, let me take a typical example of a construction company. So for a construction company or a contracting company, so on a continuous basis, you'll be like sending out invoices. And there's some what's actually going to change in terms of these invoices is that, say, for example, first and foremost, if you actually give any advance. So earlier you had this option in VAT, like where you actually need to reduce the advance and then give the net amount. So that option is not there. Again, as I said, similar to the previous example, there's no option for deductions. Even if you want to do something like reduction of retentions, a lot of these contracts work on a retention basis. So if the 100 is the invoice value, 10% the retention value is deducted. And then after that, they actually give the invoice for 90. In this case, you cannot show retention deduction because there's no option for deductions. So whenever retentions become applicable, you need to track it separately and you need to raise an invoice separately. Whereas in your invoice, you cannot mention anything or do any sort of deductions for retentions, etc. Then disclosed agent billing. So this is something typically you can see in the case of insurance agents transactions. In several cases, the ultimate insurer is someone, and you're the insured, and in the middle you have a commission agent. So I mean, like so far, what we used to see is that the commission agent, he actually raises the invoice. So now it becomes responsibility of the ultimate insurer that he directly has to raise an invoice to the insured. So without bringing the commission agent in the picture. And the seventh example of supply through e-commerce is also very similar format. So this is again the purchases that we actually do through Amazon or through Noon, etc. It becomes mandatory responsibility for the ultimate person who's actually supplying the goods to raise the invoice directly on the customer. Okay. So there's no longer a question of Amazon coming in the middle and raising an invoice on us. So that's going to extinguish. And last but not least, we have the export transactions. So export transactions, again, as I said, it's very much in the scope of e-invoicing. So whatever sales that you're actually doing to your customers outside the country, so you actually need to, there's a different set of details that you need to include in your export invoices. There's one important field that I actually forgot to mention. In the case of deemed supply and in the case of exports, if you see, actually, there is no customer whose PayPal ID or electronic address you can actually mention. So for that, the FDA has given a very important clarification. In the case of deemed supply, by default, in the customer's electronic address section, you'll be putting the standard code 0235996097. So by default, every deemed supply transactions where you'll be raising an invoice, you need to put this particular detail in the electronic address section of your customer. Similar is the case of export also. So obviously, if the person whom you're exporting to is in a country where PayPal is already in place, then it's very easy. You can actually use his PayPal ID because your invoice anyway is going to pass through the PayPal framework. So there's no confusion. However, if this not in PayPal or they don't even have electronic invoicing system in that country, by default, you'll be putting 02359960 followed by 99 in the customer's electronic address details. So these are the guidelines that the FTA has given in terms of these transaction types. However, depending upon each of these transactions, like what are the mandatory fields that you need to include, that's a different exercise altogether. So at a later stage, when we come into picture, we do the impact assessment with the gap assessment. So that time, depending upon your applicability, we will be guiding you as to what fields should be there and whatever mandatory fields where data is not there, what it needs to be replaced with, so that we can actually discuss at a later stage. Okay, again, a very interesting slide. So nothing to scare anyone, but this is just for information. So as you know, every single legislation that actually comes into picture, be it VAT, be it corporate tax, and be it electronic invoice now. So for non-compliance, always there's a charge. So these are all the various penalties for the violations, which the Federal Tax Authority has actually published. So just for the information sake, anyways, later on we'll be like circulating the slides as well. So you can actually look through the different types of penalties for non-compliance of different things. Okay, so now we're pretty much covered everything about the fundamentals of invoicing, what invoice includes, excludes, what does it imply for you as a business, what does it imply to us as tax consultants for the economy as a whole. And I'm pretty much sure you all understand that we all need to be prepared. And if you have to have a successful implementation, you need to have a very robust and a very comprehensive approach. And so these are the key strategic approach points. They can be explained in a much broader level, but my idea is to just give you a gist as to things that you need to be wary about. So starting from taking an end-to-end process view, where you will have to redesign your entire and AP process together, where you need to have a clear transition of moving from manual documents to managing real-time data, updating the AR and AP data directly, because there's a lot of changes that you also need to put in terms of the data directly that you have for both receivables and payables. Some extra fields are going to come and some fields are going to change. And you need to realign on your payment terms with your stakeholders. You need to manage your working capital. That's also a very big challenge, considering that the order to cash cycles will actually shorten with invoicing coming into place. You also mutually need to agree with your suppliers, customers on the various optional fields that either you require or you are mandated to input while actually sending out the invoices. So it's a very, vast exercise, I would say. We need to be covering the entire invoice lifecycle, that from creation to payment. And reconciliation and reporting is another very, very critical and important aspect, because on one side you have some transactions being recorded in your system, and then there is something on a real-time basis getting reported to the FTA. So on a timely basis, you actually need to reconcile those numbers, which again is a big exercise, because most of these things, I'm not sure how many of you people were actually had this personal experience of VAT implementation, corporate tax implementation. So if you actually had that experience, you know the load of data that we'd actually have to undergo, because this is a total transformation, total restructuring that's going to happen. And a lot of time needs to be invested. There are different aspects that needs to be considered. And we as tax consultants also have a very big role to play in terms of holding your hand, guiding you. We need to do early gap assessments. We need to assess the existing ERP data. So what is the data that is coming? What is the extra fields that needs to be generated? What are the extra fields that needs to be updated in your master records? Missing incorrect data fields needs to be corrected. Another very important aspect, which I want to highlight, is doing a detailed VAT health checkup. So why I'm insisting so much on this is that, so you can imagine now how things are going to change with this e-invoicing. Your data is going to go to FTA on a real-time basis. So within seconds of you completing a sales or doing a purchase, FTA will know how much sales or how much purchases you incurred. Right now, what used to happen, the typical VAT returns that used to file, you just need to put the consolidated number in the different boxes. And obviously, FTA can only do an audit on a sample basis or based on whatever logic or calculations that have backend. But now this is going to intensify the scrutiny to an unimaginable level. So it's very critical that we do a detailed VAT health checkup of every single transaction, whether you guys are doing your categorization of, various sales transactions currently or not, like 0% getting captured in 5%, or, standard rated suppliers getting captured as either exempt or out of scope. and ensuring that all the mandatory data fields as per the VAT regulations and now as per the invoice are actually captured in your invoices. So it's a very lengthy exercise, I would say, and it's a one-time exercise which is very much needed because end of the day your system should be in place, else the kind of problems that can actually cause. And also another very important point is choosing a flexible and scalable ASP. So one thing I want to highlight is that this call was primarily to give you an introduction about what e-invoicing is. But ASP, trust me, has a very big role to play in this entire exercise. So we'll be having a separate webinar, which will focus only on ASP, maybe sometime next week or something like that. So where you'll actually understand the role of an ASP, what you need to consider in ASP, and the support that he needs to give you, what you need to expect from them. And it's a very important session, I would say. So let's get geared for that. And yeah, so choosing a flexible and a scalable ASP, which is also very important. So depending upon the business requirement, your transaction type, the kind of accounting software or ERP you're using, the various models of integration, and the extra capabilities that the ASP tool can provide in terms of automatic VAT reconciliation, VAT filing. Some of the ASPs are also doing that automatic VAT filing. But however, it's a pick and choose sort of a thing, which we can actually discuss it at a later stage. And obviously, implementing a pre-validated business rules, etc. Every single data, there has to be a tool in terms of validating it because see, the ultimate source of data should always be right. So even you send to ASP, considering there are two levels of validation as I explained before. First level is by the ASP, second level by the FTA. So it's very critical that you do the first level of validation because anything which goes wrong in terms of the data and the validation will fail and you won't be able to pass on the transaction. So the first most important thing is enhancing your knowledge, enhancing the capability, knowing the expectations right. Okay, so that's what I would say. And the fifth point, multi-country expansion. Again, it's a case to case. Need not necessarily apply to all the companies. So, so that's it about the strategic approach. And then the stages of implementation. So this is a very concise view, step by step, what exactly needs to be your approach. So So what I would actually say is that there should be a very clear plan with defined milestones in terms of how you wanna take this over. Without a clear roadmap, and this will eventually, falter. So that is the reason, step by step, we need to be very clear what the objective is, what the plan of action is, and that's how we can actually ensure that we have a smooth implementation. And all of us have very pivotal role to play in this, be it the businesses, we as tax consultants, the ASP. Again, I'm insisting they have a very big role in terms of supporting us and ensuring that end of the day, we're all talking about revamping, our entire business process. So first, obviously, tax impact assessment. You need to be aware of what needs to be done, precise planning. There's a need for a lot of internal workshop, and so this is something it's a e-invoice implementation. I would say it's more of a cross-functional sort of a thing. So we cannot say it's just a finance responsibility or it's an IT team's responsibility or maybe it's a taxation department or tax consultant responsibility. All have an equal role to play in this. What's more important is everyone should be aware of what our individual responsibilities are, what the individual expectations are. So unless until this thing is not clear, the implementation, it can always fail. So there's a very much requirement that everyone who's involved needs to be aware of everything concerning e-invoicing and plugging of existing data leakages that, as I said, a VAT health checkup, which is very important, because only with a VAT health checkup, we will know what are the non-compliances that are happening, which can be fixed way before your invoicing can actually go live. Doing a transaction via mapping, very important. And step two, obviously selecting the right ASP. So see, so I would say it's not a very straightforward or a simple exercise in terms of you choosing an ASP. Obviously, we're there to guide you and we'll be connecting individually with all of you in terms of ensuring that you actually tie up with the right ASP. But however, this is very critical because with the wrong ASP selection on a long-term basis, things will become very unfeasible. Yeah. So we need to ensure that the ASPs, they conduct demos before you actually shortlist it and assisting with finalizing the ASP company. Yeah, it's very important. ERP gas assessment. So this again, like we are all of you are working on different accounting software, different ERP tools, etc. And how you actually want to integrate your ERP with the ASP, and what are the extra support that the ASP will actually provide in terms of a smooth implementation, and what are the gaps that we need to assess over here, be it the existing data fields, because ultimately, as I said, once the data goes from your system or accounting software to the ASP, it has to fulfill the requirements of standardization as per the e-invoicing print AE rules. Okay, so ERP gap assessment, that's also very much important. Integration and testing. Yeah. So integration and testing. So one thing that we have actually been advising most of our clients is that you don't wait for the live date to start. Say, for example, if your turnover is more than 50 million and you're supposed to go live starting from 1st of Jan 2027, please don't wait until then. It's for your own good. So you start the activity. See, the thing is that FDA has only proposed the deadline. It never said that if your timeline or the to start is 1st Jan, you cannot start before that. So to keep it simple, the day you are actually onboarding the ASP or selecting the ASP on the Emara tax portal, you can go live from the same day. So the moment you select him, the ASP approves it you. From the very next day, you can go live in terms of your invoicing. So I would say at least keep a buffer of 2 to 3 months where you can do your integration, you can do your testing, ensure that all the validation rules, because by that time, even your team will actually get a reasonable time to actually do all the testing, etc., and be e-invoicing ready on the given date. So implementation and go live support, again, this is something which you need to be very clear, having your expectations set right with your ASP as to how the live support works, what is the implementation phase, etc. So however, we're there to guide you, hold your hand in each of these spaces. But this is just for your understanding and knowledge that I just wanted to highlight this. Okay, so we almost reached the end. So what I would actually like to emphasize is that the basic crux of the slide. So what I'm actually trying to say is that what we are witnessing is actually a change in the era. Okay. So don't treat e-invoicing as a new compliance that is coming in place. No, that is not the case. This is an evolution. As you see, we are just seeing an evolution in terms of how the transactions are exchanged between the party, right? From the physical invoices that used to happen like around 40 years back, to the email invoices or the PDF copies that used to be exchanged over the last 15, 20 years. So the future is all about invoicing. So another thing that I actually want to insist is that I'm sure whenever there is actually any sort of a change that takes place, and it's very evident that we actually come up with this sort of a resistant mindset. So our advice to you is that embrace this change, look at the positivity, look at the positive transformation and the changes that actually can bring about in your business, in your ways of working, etc. And lastly, don't treat this as a cost. It's nothing but a long-term investment for a better business future. So to keep it in a simple words, so that's my say. And then, so invoicing is discussed, it's going to live. So what next? And there are several things that we can actually expect post the invoicing going live. B2C coming into scope down the line. It's a matter of few years. They can even come with a mandate of including the business to customer transactions in the scope. VAT return becoming auto-populated again. So this is also, as I insisted, one of the things that you should actually check for in your ASP if they have this capability provided. HS coding. So HS coding, harmonized system coding. There is a high possibility which people in the market speak about, whereby the VAT percentages, etc., might be redefined based on the harmonized system coding that can be assigned to different products. And obviously, changes in the VAT rate. I mean, just don't assume that this is something that I'm actually kind of like assuring you that it's going to happen. It's just based on the market sentiment, which we can actually foresee, and we need to be mentally prepared for these things to actually come into picture. Automatic audits, obviously, the very purpose we're actually doing e-invoicing, etc., is that in the future, it'll be easier for the taxation authorities to do an automatic audit rather than they coming on site your office, checking your documents, etc. So that's gonna go away. There's discounting. So this is all about e-invoicing. So everything that I actually had to share, I've actually put it across in these slides. And we have a Q&A session. Okay. I just can't believe that we are on time. It's exactly 4, which was the time which we actually factored for the Q&A session. Okay, so Sushma, over to you. We have like some time to actually cover the various questions that the people in the webinar would have raised. So we can just address whatever questions we can actually.
Thank you, sir. Thank you so much for your efforts and time. Actually, there are no questions. I think you've pretty much covered the whole introduction in a detailed wise.
Okay. So we don't have any questions.
Yes, sir.
Oh, wow, very surprised. So which means to say that most of our audience, I mean, like have a very advanced level of understanding as to how to be compliant for invoicing and various intricacies which are covered. There is one, okay, Saloni Shah has raised her hand. Uh, Saloni, what I would request is if you can just, yeah, put across your question. Yeah. So, Saloni, you can just put in your question and then we can just try to answer. Or Sushma, can we like unmute her? Is there a possibility of unmuting her?
Yes, I'll do that. Yeah.
Yeah. Just check. If not, then Saloni, you can just type in your question in the Q&A section and then we'll just read it out from there.
Hi, Saloni. You'll be able to use your mic now. Could you try it, please?
Okay, I think she's put a question. In the high seas transaction also, we need to do invoicing. Yes, Charlie. In one of the
Hi.
slide, I actually covered that, whereby I mentioned that high sea sales transactions are very much within the scope of invoicing. So as per the earlier VAT regulations, obviously it was out of scope, and we could also raise a simple commercial invoice. But now high sea sales, they come under the umbrella of invoicing. The only difference being that you don't have to raise an electronic tax invoice, but you'll have to raise an electronic commercial invoice. So
Okay.
yeah.
But if what if when as you said that whenever we generate the purchase invoice or sales invoice, whatever it is directly goes to FTA, correct?
Yeah, it goes to your ASP validates it, and he sends it to the SP.
Yes.
FTA.
Yes, but what if we need to modify that invoice in future or something like that?
The only option that you have once you transmit an invoice is to raise an electronic credit note. So as I said, once you send an invoice, neither you have an option to change it, nor does your customer have the option to reject it. So the only option that is available is raising a credit note, fresh credit note, canceling out the transaction.
No, but the minor corrections, if we want
No,
to
there's nothing
do
like
them.
minor, major. So that's what the validation rules that I was talking about. So that's the whole
Like the price, like
behind
the
the.
changes in the pricing or changes in the quantity or something like that.
No, actually, if I step in your shoes, I can actually understand what you're coming across. But these kind of structural gaps has to be fixed before we actually go into invoicing. So
Okay.
now there's a different level of expectation in terms of like, how our accounting software works, how we as people work. So I would say there is no room for these kind of inefficiencies. If at all anything like that, you say it could be for any reason. It could be due to manual error, you sent a wrong invoice, or maybe after sending the invoice, the customer had his own concerns, and then a fresh set of negotiations started. Then you wanted to revise the price. I mean, it could be any circumstance due to which it will compel you to change your invoice, but the only option is to raise a fresh credit note, canceling out that invoice, and then raise a new invoice.
Okay, fine. Thank you so much.
Yeah, no worries. So if anyone, we still have a lot of time, so we're actually scheduled a half an hour time slot for Q&As. So anyone else has any questions, you can actually raise it in this platform, or however you have our email IDs as well, so you can always reach us out. But if you have any questions that you want to discuss it now in the session, yeah, you're welcome. Okay, fine. So Sushma, looks like we don't have any more questions. Uh, but however, I mean, I would request all of you guys to feel free to reach out to us for any kind of queries or clarifications that you have. So based on the regulations, the legislation, the guidelines that we
Hi,
have till
sir.
now.
So there's actually one
Yeah,
question.
yeah.
Yes. So Mr. Dharam asks if we need to send invoice on daily basis or monthly basis.
Uh-huh. Okay, I know Dharam. So Dharam, if you're actually talking about summary, so if you remember, there was this unique transactions that I was actually talking about. I can actually go back to that slide. Just give me a minute. Uh, because Dharam is from TradeX and I understand his perspective from which he's actually putting across this question. So if you look at this, Dharam, I've actually put across this 14 different types of transactions, which will actually define the data fields that needs to be inputted in your invoice. So at a broader level, this can also be called as a 14 different types of transactions or invoice types that will be flowing across the market. So I think your question actually pertains to continuous supply invoices. So for summary invoices, I'm not very sure about it. I'll answer both of this there. So if you're actually talking about summary invoices, yes, FTA has actually given an option whereby you can actually give summary invoices on a daily basis or a weekly basis. You need to give a summary invoices. But however, as I had said, these are special transactions, and this will actually mandate some extra fields that needs to be inputted, into your invoicing. So that is something when we actually do the gap assessment, impact assessment, we'll actually have to factor what is the nature of the transaction, and depending upon the nature of the transaction and understanding between you and your ultimate customer, what are the other extra fields that we need to actually put it in the invoice. So to answer your question, yes, we can do this. Okay, I think we don't have any further questions, Sushma. Sushma, over to you.
Thank you, sir. I thank everyone for attending today's webinar. We sincerely appreciate your time, participation, and engagement throughout this session. We hope this webinar provided deep and valuable insights into the evolving landscape of e-invoicing. This is just the beginning of larger knowledge sharing initiatives. We will be conducting more webinars in the future for where we dive deep into uh, detailed phases and practical phases of e-invoicing, implementations, compliances, and business application. In addition, upcoming sessions will also focus on important topics like tax regulations, compliance requirements, IFRS updates, and any updates which to keep us informed and up to date in this rapidly evolving industry. Thank you again for joining us, and we look forward to connecting with you in future sessions. Thank you.
Thank you, everyone.